Black banks were intentionally targeted, structurally deprived, and legally restricted in ways that made it nearly impossible for them to compete on equal footing with white owned banks. These restrictions made black banks less profitable and far more vulnerable to economic shocks, which helps explain why so few survived from the late 1800s to the modern era. When the Federal Reserve Act of 1913 was passed, many black banks, were excluded from membership or had delayed access to the Fed, couldn't borrow at the discount window, emergency lending facility, couldn't access central bank liquidity in times of economic stress. This left them vulnerable to bank runs and recessions, while white banks had a federal safety net. Let's file this down. Number two, categorized primarily as mutual savings banks or trusts. Many early black banks were not chartered as full commercial banks, but as savings banks, trust companies, credit associations. This meant they had limited lending authority, couldn't engage in investment banking, large scale underwriting, or stock market transactions. White banks diversified into commercial and investment sectors. Black banks were stuck as small local lenders, often by state laws or federal chartering bias. Number three, lack of access to federal deposits and contracts. White banks often received government deposits and municipal accounts for pensions or public payrolls. Black banks were denied these lucrative contracts, which would have added long-term revenue and stability. Number four, regulatory bias and discriminatory scrutiny. Black banks faced harsher oversight by banking regulators, quick to shut down underperforming black banks while bailing out white ones. Denied FDIC insurance early on, increasing the public's distrust in black institutions.
What about structural barriers to black bank profitability?
Factor in constructing effect on black banks. Segregation, which resulted in dedicational customer base. Black banks couldn't expand into white areas, which resulted in low customer income, background little, capital to lend.
Come on, son, y'all better write this down.
No interbank network, isolated from white correspondent banks. Limited charters, couldn't grow into investment or full service banking. No federal safety net, vulnerable during crises and Great Depression. Most black banks in the early 20th century were chartered as thrift institutions. They focused on personal savings and mortgages, not business loans or securities. Investment banking, like underwriting bonds, dealing stocks, was off limits due to capital requirements, regulatory discrimination, racial exclusions from Wall Street networks. Even if they wanted to become investment banks, they couldn't raise the capital, get the charters, or enter the white-dominated financial sector. Many well-known black banks took economical hits because they are segregation and systemic racism. Look at St. Luke Penny Savings Bank, founded by Maggie Lena Walker. One of the earliest black-run banks, it grew quickly but was forced to merge during the Depression due to regulatory pressure and lack of federal support. How about the Freedmen's Savings Bank, 1865 to 1874, created to help freedmen save money, mismanaged by white trustees, invested in speculative railroads. Collapsate, wiping out millions in black savings, destroying trust in black finance. Mechanics and Farmers Bank, Durham, North Carolina, a rare success story that endured for decades, survived by being conservative in lending and closely tied to a tight-knit black business network. Question: why most black banks failed? Systemic undercapitalization. Requested, couldn't compete with white banks' resources, the lack of federal protection, no deposit insurance or Fed membership early on. Segregated economies, stuck in low wealth, underserved communities, regulatory bias subject to stricter shutdowns and fewer growth approvals, no access to high profit sectors. Black banks were not poorly managed, they were intentionally boxed in by systemic racism, legal barriers, and financial discrimination. White America's banking system grew fat off public funds, investment privileges, and Fed backing. Black banks were blocked from those lanes, then blamed when they couldn't keep up. Don't let these folks trick you out of your spot. Goofy talking points from Candace Owens, Larry Elder, Thomas Sowell, Jared Taylor, Nick Fuentes, Myron Gaines, and other goofies. Stay tapped in with FBA news and updates.